Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Wednesday, everybody. I hope everyone's doing well. All right, so we're starting off with a look at the economic calendar. Why? Well, we do have PPI data that just came out at 8:30, so we'll see what kind of aftermath on that. Currently, look, let me show you something here, and we'll go back to the calendar. So this is 8 o'clock, and you'll see just shortly after 8, we started organizing on the intraday time frame of the S&P into what I call a double red downtrend. 8, 13, 21, 34 are all heading lower. And that's telling us that this market is, almost 90 minutes, like an hour ago at this point, inheriting a downtrend, inheriting bearishness. And so when you're looking at in the morning, what kind of market you're going to be dealing with, what kind of S&P, NASDAQ, gold, crude, please, when I say market, we do want to get specific to the symbol. Russell might be in a different mood than the S&P. Gold could be moving differently than crude. Obviously, those are things that I know we know, but sometimes we tend to brush the entire market with sort of the same red or green ink, right? Red or green paint where we consider, well, the markets are down. And it's a simple, and I know it's just lingo, right? It's just words. But when we start thinking in that way, we start looking in that way too. And one of the things that we want to do really is twofold. One, use the hot zones every week, use these different economic scheduled high impact, high volatility economic events to understand that they could give us the volatility we need to trigger our entries. And two, that there are uptrends out there. There are a number of uptrends that have been, moving and grooving for at this point weeks. And by the way, I scanned for those with that layout. I know it looks a little busy at first, but when you understand that there is really no better way to look at high concentration weighting of the ETFs and the indices that we trade and look at which stocks are relative outperformers. You really want to look at the chart. You want to look at, of course, the structure. And that's where the JT trade flag is very, very handy. Then you want to look at, in order of the weighting, what is the structure of each one of these stocks? And then compare that against the broader picture, the tide. A lot of times traders will compare their own curated list of stocks against each other. I do not believe in that. And since 2008, that doesn't make any sense to do, because with the high volume and the attention that ETFs are getting, what we know now is that the way in which Wall Street, the way in which these ETFs curate these names is relative performance. That's the outperformance that I'm looking for. So I hope that points you in the right direction. This is the XME. This is one of about 4 or 5 sectors that are just gorgeous trends. We have gorgeous trends that are down. We have gorgeous trends that are up. And most of the uptrends right now, they're going to be based in the inflation narrative that we've talked about for many, many months now. So, for any of you that are avid charts and coffee watchers, the caffeinate and dominate crew, this is not a new narrative. So what'll be great now for the narrative is a lot of the latecomers now saying, oh, crude's in an uptrend, or I want to buy oil stocks, or I want to buy metals. Awesome. Come on over. That's only going to help us see the continuation of the uptrend, because uptrends need participation. So the more this becomes mainstream, the more this becomes something that an increasing number of traders and investors are finally getting on the radar, the better it is for us. All right. So with that being said, Let's head on over to our charts here. I'm going to stick with our Thinkorswim charts here, and this is a layout, by the way, if you did not know. This is a layout that I provide, a version of this. I shouldn't say the exact, because sometimes I add my premium tools, but most of this layout is available in the room drives, in the futures room, options room, and of course, my Sector Secrets Mastery. It's available in the room drive, available for members. All right, so with that being said, let's go ahead and jump into your questions. Of course, this is what this show is all about. All right, starting off. Hey there, Dean. Good morning. I see Bank of Canada interest rate decision and monetary policy on the economic calendar. Awesome. You're keeping an eye on those hot zones. Can you help me understand how that might affect the EWC? Sure. So keep this in mind when it comes to EWC and also FXC. It'll primarily affect the currency first, right? We're going to see the currency, the US dollar versus the Canadian dollar, volatility get affected first. And then EWC. So why would EWC even be in play? The two primary weighted sectors in this are railroad and financials mostly. So we know that financials do like higher rates, but are the rate increases that we're seeing enough to benefit financials? So far, we are not seeing that play out in the US. So I'm not going to presume we're going to see that play out in other countries quite yet. However, EWC is pulling back to the wave and the Darvis, as you can tell, primarily a double green market. So I think it is viable, but be ready to sort of fasten your seatbelt because, of course, in an environment where we're going to get a central bank decision, more volatility, sometimes that volatility closes the distance to our levels, but it also means that we need to be more aware of the volatility that comes with it. So not only EWC, which I would focus on to the long side, but also FXC, the US dollar, that I would also play to the long side. All right, so hang on one second here. Getting some feedback. Okay. Sound is fading in and out a bit. Okay. We will, let me see if I can do something here. Give me one moment. I got a lot going on this computer right now, so that might have something to do with it. We'll streamline some of that. All right. So great question. I love that you're looking at the calendar, Dean. Awesome, awesome, awesome. All right, next up, good morning. Hey, there's Irons. If we get USO, if you got into crude oil from, here we go, let's go to CL. From the 11th, right? Beautiful. You know, I look at crude and I've been just, this is a setup that I talked about in the futures room and in the Sector Secrets Mastery. And I know a number of mastery traders and future traders took it, and I didn't. So when people say, Rog, what do you do when you miss trades? The people around me get to hear me really just kind of complain and call myself stupid for about an hour or 2 or 5. And then I just get over it and wait for the next setup. So it actually makes me very happy if we have members and watchers of the show who grabbed a piece of it. It does sting less for me when I know that you all have got a piece of this. So what do you want to do? You want to take a look at about 104.80. 104.80. Anytime you're in chop, and yes, crude is in chop. This was a distribution fade buy off the Darvis level, oversold stochastic. Oh my gosh, I'm gonna start to put myself in that. You know what? Let's take a look at this because I do want to show you all this setup because it is a beautiful setup, and I want to show you all the pieces of what you want to see for really a textbook fade. As much as this is going to pain me, I know it's going to help you all. Right here, stochastic, neutral underlying market, which by the way, we've been neutral since the end of March. Darvis, whether you got the 2.0 or 3.0, there is that support right in there. That's the buy. That's the buy in this area. Now, CL and USO, 6 of one, half dozen the other, the setup is identical. So you see the signals are going off, the support levels hit. In chop, I'm going to cut it in half, and that's where I come up with that 104. So if you don't have the slow stochastic on your chart, set it up. Or next time you see me in one of the rooms, Rog, show me how to set this up. What's the value in it? Ask me and I'll walk through it, whichever room you're in. I'm happy to do it because it's a valuable indicator in a market where we are dealing with a lot of chop. And this is just built into so many platforms, unless you've got something else like Ready, Aim, Fire, unless you, well, let me put it this way, unless you do have Ready, Aim, Fire, this is the only other indicator that's really going to help you in chop effectively, right? Effectively. So there you go, 104.80, okay? All right, next up, with announcements of ethanol E15 gas changes, I did see that, that they're going to allow more of that, yeah. Give me 1 second here. Let me go on over to corn, because that's kind of the conversation, right? Does that affect how bullish or bearish we should be on crude oil or corn? I think that corn's already in an uptrend. So this is just another reason why pullbacks in ZC or CORN, the CORN ETF, should be focused on, are very, very valuable for us. So Christian, what I would say is it's actually more bullish. I don't think it's really a narrative for crude at all. I think it's more of a narrative for corn. So do what we've been talking about for weeks, if not at months, for months at this point. Buy the dips in ZC, buy the dips in CORN, or get long calls, whichever, choose your own adventure, however you want to navigate through that uptrend. That is the way you want to do it. So good stuff. Thanks for the question. All right, next up, Lloyd, would I please take a look at ARC, Ford, and PayPal? All right, usually don't take multiple simple requests, but those are all pretty good ones, so we'll jump into those. So ARC-K. ARC-K, look, I don't trade ARC-K. You can. It's a short the rip situation right now. My interest in ARC-K is usually going to be a weekly time frame. And, if we follow the, Cathie Wood herself, who says, look, my time horizon is 5 years, although she has some new, I don't know. Right now, I'll tell you this. The way that I'm viewing ARC is the way that I think the cycle in ARC is going to run. She's going to accumulate. She's going to build a position. I am by no means in any way trying to oversimplify the process. Just, I think the experience for us as investors, and I have exposure to ARC-K, ARC-F, and ARC-G. ARC-G is my largest position, just, all my cards on the table. So the way that I've calibrated to this is I'm not going to trade it, Lloyd. I know there's other names I'd rather trade. A lot of the names, by the way, weighted in ARC are relatively illiquid. And oftentimes they're some of the biggest shareholders anyways. So I don't tend to trade it, but I put it on a weekly time frame. And I just remember that it's going to be probably sideways and weak until it just explodes. And I think that that's the way we're going to have to survive being investors in ARC. Again, I don't proclaim to be an expert at all in anything they do. I don't track it as closely as I once did. There are other elements of my analysis that are working far better. But, a year or two ago, I was watching this all the time. There were great trades to be made. Now, Lloyd, if I look at it once a quarter because I own it, that's probably a lot. When it comes to Ford, so Ford, my last trade in Ford was a loss. My last trade in Ford was a loss. We tried to play the bounce off the 200 after, pullback buys through the latter part of last year. Now it's below the 200. It's really more red over red. So this is more of a short type setup. But again, time horizon and time frame are everything. If you've got a longer term time horizon, if your time horizon is 6 months to make the team, say 1, 3 to 5 years minimum to hold, the closer F gets to the 200 on the weekly, that would be a longer term time horizon. The shorter term time horizon is basically shorting the daily until it gets down to that 200 weekly, 200 being the key level on both. It's why I'm bearish on the daily. but why with a longer time horizon I'd be bullish on the weekly. And that kind of is an interesting, that kind of leads, Lloyd, to an interesting discussion, because what we've just added as of Monday, brand new. And if you haven't caught it yet, you can catch the replay. You can catch up, because we're going to do this once a quarter. How do I manage my longer term portfolio? I don't know that I call them investments. I was just talking to another group of investors, active investors, yesterday. And I said, look, I don't know that the way that I was investing in 2008, 2009, 10, 12, I don't know that I'm going to ever be in positions for that long again. I was investing my mom's money when I was in my late teens. I don't know that I'm going to be a holder of stock for that length of time again. For me, I know that the effectiveness of my book of trades, that's not changed. That's always days to weeks in terms of a time horizon. But in terms of a time horizon for investing, that's probably shortened to 3 to 5 years, if that. So I've really become a bit more of an active investor, because we just see a different, I just notice a very different type of environment anymore. Now, are there names that I own where I reinvest the dividends and ownership of more shares is the goal? That to me is investing. But if I'm looking at entering a position and holding it, even if it's for 5 years, you can have a 5-year trade. We can have a 5-year trade if all we're really looking for is to profit on the price increase, the price differential. So Ford is in an interesting place for me. ARK is a straight up investment. That's that 3 to 5 years. Ford, we can do both. And with PayPal, so that's straight up daily time frame, starting off there, downtrend. It's trying to level off. I'm still more bearish because we're below the 200 on that daily, but on the weekly, we're also below, and that is in a downtrend as well. So there's no buy here. This would be, straight up shorting rips in PayPal until we start to stabilize in such a way that I either form a bottoming pattern that I look for, or we start to find stability above the 200, or from a sector rotation standpoint, I start to see sort of what I call the Ferris wheel. This is something that I taught on Monday to our Sector Secrets members. That's something we're doing now, where we quarterly will talk about when I'm doing longer term. And the concept is, do we understand what's at the bottom of the Ferris wheel? Do we understand what's at the top? And are we seeing the true rotation where the stronger sectors are being rolled out of, while the weaker ones are finally starting to move higher? And so we use a combination of daily, weekly, and that sector analysis to do that. And PayPal would probably be then, what sector is it most weighted in? What would it participate in terms of a tide, and move higher? So thanks for the question. It lets me kind of talk to you all about all the different aspects of being a trader, because it's not just about day trading. It's not just about the swing trading, and it should also include that longer time horizon. So very cool. Thanks for the question. All right. Next up is, can we take a look at crude? We did. Can we take a look at S&P? Happy to do it. All right. So S&P is interesting. If you caught I can't remember if I did this in the free video yesterday. Check out the free video, because I talked about a number of places that I'm watching right now, or the premium. But anyways, there are a couple names that are sitting at the 200 on the daily, and they're in chop, and they're also sitting at the 50 of the Fibonacci. And if we're going to see some support here, now is when we're going to see it. Either the S&P, gain some traction at 43.82, which is the 50%, and where that 200 is right around 4,300. Either we gain traction in that 20-point area, or much like the other indices, S&P is going to find itself in the bearish hemisphere south of the 200. And the only reason that the S&P, I believe, is where it's at right now is because of healthcare. So if there's a dip you want to buy, and this is one I'm getting ready to talk to our Sector Secrets Mastery folks about, it's a dip buy in healthcare. Maybe at the tide level, maybe at individual boats, but this is finally coming back down towards the 21, where it's making a lot of sense. So when we look at the S&P, think a little bit more about what's happening within some of the stronger sectors. All right, last question. This is an open trade that we have. X, yes, we bought the 21 coupon. I'm looking for movement higher towards the Darvis. I do like the sector this is in. I do like the structure. This is a dip buy, open trade. This is the kind of thing that we look for in the mastery. Thanks for the question. All right, gang, as always, thank you for joining us for Charts and Coffee each and every morning, Monday through Friday. We even have a Sunday show now, 6 p.m. We have our weekly notes live. So again, gang, keep an eye on that economic calendar. I love the questions that understood the economic calendar implication. Fantastic. I'll see you all tomorrow. Be good to each other. Until then.